Hey everyone, welcome back to Corporate Decoder. Today, AMBA has filed their quarterly report, and I'm seeing some concerning trends in their cash flow and inventory. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is showing revenue growth, but a big chunk of their cash is disappearing, and they are sitting on a lot more inventory than before. Ambarella Incorporated is a company that designs specialized computer chips, kind of like the brains for smart cameras and other AI-powered devices. They are up against some tough competition, and the global chip market is always a bumpy ride. Let's dive into the numbers. As of the 30th of April 2026, Ambarella had total assets of about $794 million. That sounds like a lot, but looking closer, their cash pile has shrunk quite a bit. Cash and cash equivalents were around $114 million, down from over $191 million at the start of the year. That is a big drop, meaning they are spending more cash than they are bringing in from their normal business operations. And where is that cash going? Well, their inventory has ballooned. Inventories were over $80 million at the end of April, up from about $52 million just 3 months earlier. That is nearly a 54% increase. This usually means they either expect sales to really pick up, or they are having trouble selling what they've made, which can tie up valuable cash and lead to write-downs if the products become outdated. Looking at their performance, they reported a net loss of about $18 million for the first quarter of their fiscal year 2027, which ended in April. This is actually better than the previous year when they lost over $24 million. So while they are still losing money, the losses are shrinking, which is a small positive. Revenue itself has grown though. For the 3 months ending the 30th of April 2026, revenue was about $100 million, up from $85 million in the same period last year. That is a healthy 17% increase, driven by more customers wanting their AI chips, which sell for more than their older camera chips. But here is the catch. Their cost of making these chips went up too much faster than their revenue growth. Cost of revenue rose to nearly $42 million from $34 million last year. This means their gross profit margin, the money left after paying for materials and manufacturing, has squeezed a bit. They're also spending a ton on research and development, which is crucial in the fast-moving tech world, but it is a big expense. Research and development costs were around $58 million. While slightly down from the previous year, it still eats up a huge chunk of their revenue, more than half in fact. Selling, general, and administrative costs, which cover things like marketing, salaries for non-technical staff, and office expenses, also went up. They were almost $20 million, an increase from about $18.5 million a year ago. Now back to that disappearing cash. Their operating activities actually used up over $25 million in cash in the first quarter. This is a sharp contrast to the previous year when their operations brought in over $14 million. This big swing is mainly because of that inventory buildup and other changes in how they manage their short-term assets and debts. They also spent a lot on investments, nearly $55 million, which is way more than the nearly $21 million they spent in the same period last year. While investing in securities can be good, it is still cash going out the door that could be used elsewhere. They did buy back some of their own stock, spending about $2.4 million on it. Companies sometimes do this to boost the stock price, but when cash is tight, it raises questions about priorities. Given all the spending, their total cash and cash equivalents, including restricted amounts, ended the quarter at around $114.8 million. That is a significant drop from over $191 million at the start of the year. Now let's look at the risks they've laid out. They are heavily reliant on just one distributor, WT Microelectronics, for a huge chunk of their revenue. In the first quarter of 2026, WT accounted for 61% of their total revenue. Losing this distributor would be a massive blow, potentially causing shipment disruptions and hurting their finances. And of course, they are in the semiconductor industry, which is notoriously cyclical. This means ups and downs are normal, but right now they are facing supply chain challenges that could mean longer manufacturing times and higher costs. This industry is like a roller coaster, and Ambarella is right in the middle of it. Competition is another big worry. They are up against giants like Nvidia and Qualcomm, who have way more resources. They are trying to innovate with AI chips, but staying ahead in this game is incredibly tough. One of their biggest concerns is that customers might cancel orders or delay production. Since they build chips in advance based on forecasts, inaccurate predictions can lead to excess inventory, which is exactly what we saw them building up this quarter. This could mean big financial losses if they can't sell those chips. They also point to the global economic and political situation as a major risk. Things like high inflation, trade wars, and international conflicts can all hurt demand for their chips and disrupt their supply chains. For example, they're watching the tensions between the US and China very closely. Overall, Ambarella is seeing revenue growth and making progress on shrinking their losses, which is good, but the sharp drop in cash, the massive build-up in inventory, and their heavy reliance on a single distributor are significant red flags. They are investing heavily in the future with AI, but right now it looks like they are burning through cash and dealing with some serious inventory challenges. The risk I am watching most closely is their cash situation and how they manage that ballooning inventory. If they can't turn that inventory into cash quickly, or if their cash reserves continue to dwindle, they could face serious liquidity issues. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord for more insights.